Please come to one question number 13. A company is carrying out operations which are seasonal by nature. It has to prepare first quarter interim financial statement for the period ended on 30th June 2020. So you underline quarter ended 30th June 2020. As per IAS 34, describe the periodicity of its interim financial statement along with comparatives. And one more thing, underline, it is seasonal business, seasonal by nature. So what you do, you give one additional comparative and additional statement for interim period covering 12 months period. So first you will try what are the SOFP you will present. Seasonal SOFP for interim period as at 30th June 2020 and for comparative as at 31st March 2020, that is immediately preceding financial year. But if it is a seasonal business, you can give one more SOFP as at 30th June 2019, because this may not be comparable with this. If it is a seasonal business, here you may have more inventory, here you may have less inventory, something like this. Here you may have a huge cash and bank balance, here you may not have because of seasonal nature. Okay, now you try SOPL. Is it the first quarter or the second quarter? We will assume it is the first quarter, 30th June. So first quarter means interim period P&L account 3 month ended 30th June 2020. Correct? What about cumulative? Same, so not required. For the first quarter, you don't have to give cumulative from beginning till the end of the year. It will be the same. Even if I give cumulative, it will cover the same 3 months period. But if it is a seasonal business, then I can give one profit and loss 12 months ended 30th June 2020, and comparative will be exactly same period in the previous financial year, 12 months ended 30th June 19. Correct? Same thing for cash flow statement also if it is the first quarter. This is the first quarter, it covers 3 months. Cash flow statement will be from the beginning of the year till the end of that interim period. 3 months ended 30th June 20. 12 months ended 30th June 20. Comparative will be 3 months ended 30th June 19 and 12 month ended 30th June 19, right? What about SOCI? Same as above. Same as above. Those who have done, you try question number 14. 14 is little different than this one. 14 is little different than this one. In 14 number, the quarter is ending on 31st December 2013. Remaining details are same. But this is the third quarter. So SOFP will be first for the interim period as at 31st December 13, comparative as at 31st March 13. Is it right? And then one comparative for the same date as at 31st December 12. Same day previous year. So in seasonal business, these two can be compared, right? Now what about SOPL? For current year, 3 month ended 31/12/13. Its comparison will be with 3 month ended 31/12/12. Then cumulative year to date, 9 months ended 31/12/13. Its comparison will be 9 months ended 31/12/12. And if it is a seasonal operation, we can give a 12 months P&L account also. 12 months ended 31/12/13 and 12 months ended 31/12/12. Cash flow statement. Cash flow statement will not be given for 3 month ended directly. 9 months ended, cumulative 9 months ended 31/12/13, and its comparison will be 9 months ended 31/12/12, and in case of seasonal business, 12 months ended 31/12/13, and its comparative will be 12 months ended 31/12/12. And what about statement of changes in equity? Same as above. Okay. But this 12 months is an optional. Any query now? No query. Why? Understood? Paragraph number 14 actually we have already covered. Restatement of previously reported interim period. If there is a change in accounting policy other than the one for which transition is specified by the new IFRS, shall be reflected by restating the financial statement of prior interim period of the current financial year and the comparable interim period of any prior financial year, that will be restated in the annual financial statement in accordance with IAS 8. So this we have discussed. All interim period of current financial year and all interim period of comparatives will be restated as per IAS 8, except if the transitional provision of the standard requires otherwise. And point number next is, when it is impracticable to determine the cumulative effect at the beginning of the financial year of applying a new accounting policy to all prior period, adjusting the financial statement of prior interim period of current financial year and comparable interim period of prior financial years to apply the new accounting policy prospectively from the earliest date practicable. This also is covered in IAS 8. They are asking you to give retrospective application. But if retrospective application is not possible from the first day when the accounting policy was introduced for that transaction, then you go as back as you can from which retrospective application is possible. Okay. So you will apply retrospective effect from the earliest date practicable. Only this much is enough. Now the standard is over. Some of the changes done between Ind AS 34 and IAS 34. Ind AS 34. In Ind AS 34, there is a footnote has been added to paragraph 1 of Ind AS 34. Because in India, companies are required to follow some clause of listing agreement which clause number also has actually changed now. LODR, listing obligation and disclosure requirement. So don't worry, there is a clause, interim financial reporting, that unaudited financial result required to be prepared and presented under clause 41 of the listing agreement with the stock exchange is not an interim financial report as defined in paragraph 4 of this standard. So this paragraph is only added in Ind AS 34. It is not mentioned, of course, in the IFRS, because IFRS does not follow Indian Stock Exchange requirement. And second is again same problem every time it will come, that Ind AS 31 only deals with one single statement approach. In the same statement we have P&L account and other comprehensive income. But in the IAS 34, it allows you two options, single statement approach, or you can follow two statement approach, and that is allowed for interim period also. Okay. Now some questions answer, simple ones. ASF Limited is dealing in, where is this question? Lost. ASF Limited is dealing in seasonal products for the first quarter ending 31st March 2016. ASF Limited gives you the following information. So don't worry, this question is similar to question number 15, tick mark. Only the numbers are different, but the question is same. Question number 15, tick mark with different data. ASF Limited is dealing in seasonal products. In your book it's written Priyanshu Limited is dealing in seasonal products. The first quarter sales for 31st March 2016 gives the following information: sales, salary, advertisement, administrative and selling expense. In your question also sales is given, salary and other expense, and all this they have merged into advertisement and selling expense. While preparing the interim financial report for the first quarter, ASF wants to defer rupees 21 crore expenditure to the third quarter on the argument that third quarter is having more sales and therefore third quarter should be debited with higher expenditure. What an idea! Considering the seasonal nature of business, calculate the result of the first quarter. So what you will do, you will take 50 sales minus expenses, 30 to 8. So the answer is 10. Profit is 10. What about this argument of the company? It is not allowed. Expenses incurred for a particular quarter should be charged to that quarter only if it cannot be deferred or preponed for annual accounting purpose. So even though it is a seasonal business, these expenses pertain to this particular interim period only and will be charged to this interim period only. Okay. So if you see that answer of question number 14, there is a comment given below the P&L account. As per IAS 34, on interim financial reporting, income and expense should be recognized when they are earned and incurred respectively. Therefore, argument given by the company relating to deferment of rupees 10 lakh is not tenable as expenditure are uniform throughout all the quarters. So that way you have to write the answer. Only difference between the two questions is numbers. Now try this question. Number 16. On 30th June 2011, X Limited, this question I think is 18 number. You can come to 18. 16 and 18 are same. You can just read any of the two. In two different exams with different numbers. X Limited incurred rupees 3 lakh net loss from disposal of a business segment. So when was this loss incurred? 30th June. Also on 31st July, the company paid rupees 80,000 for property taxes assessed for calendar year 2011. This transaction is a specific transaction. This expenditure is related to entire year. How should the above transaction be included in the determination of net income of X Limited for the 6-month interim period ended on 30th September 2011? Very simple. First you will say that this loss of 3 lakh rupees is a specific loss incurred on 30th June. This will be fully recognized in the first half year, first interim period. In this question, one interim period is of 6 months, not 3 months. Every time it is not 3 months problem. So this will be recognized as expense of that interim period only, matter closed. What about this property tax? Property tax is paid for full year. Our accounting year is in this question 1st January 11 to 31st December 11. And what is our interim period? Our interim period in this problem is covering 6-month interim period ended on 30th September. This is calendar year. This is my interim period for which we are preparing the interim period report. This interim period covers 1st April 11 to 30th September 11. This 80,000 rupees is paid for 12 months. So what you will have to do, you have to allocate this 80,000 over first 3 months, 6 months and 3 months. So 20,000, 40,000 and 20,000. So for accounting purpose, this 20,000 payment is payment of outstanding expense because it must be appearing in our books as outstanding expense as it was due. This will only be charged to P&L account and this will be treated as prepaid expense. Okay, this is the payment of outstanding expense. This is going to be charged to P&L account and this is prepaid expense. So the entry will be outstanding expense debit 20,000, P&L account debit 40,000, prepaid for the next period 20,000 and to bank 80,000. Right? Okay, now we'll come to next question. This answer is printed. Okay, one more try where you have lot of adjustments. Question number 17. Saurav Limited reported a PBT of rupees 8 lakh for the second quarter ending on 30th September 2014. On inquiry, following issues were noticed. Property tax of rupees 60,000. So what you do, first you type 8 lakh on your calculator and we have to reach the correct profit of this interim period. So 8 lakh you have typed on your calculator. Okay, now tell me what will you do. Property tax of rupees 60,000 paid during the quarter for the full year has been recognized in full. Is it right or wrong? What is wrong? You should recognize 1/4 only. In the previous example we saw property tax is a charge for 12 months. So this quarter share will be 15,000 rupees only. You have charged 60. So your profit has been understated by 45,000. Add 45,000 to 8 lakh figure. So what is your calculator showing right now? 8 lakh 45,000. Okay, continue. 1/5 of rupees 15 lakh being marketing promotional expenses incurred on 23rd September 2014 has been recognized based on past experience of higher sales in the last quarter of the year. Now this is a serious problem. You have incurred 15 lakh rupees in this quarter sales promotion expense. How much you have recognized? 1/5 only. 1/5 means 3 lakh, which means you have shifted 12 lakh to the next quarter, because next quarter you think will have higher sale. So next quarter you should charge more sales promotion expense. Is the company right? Tell me why it is not right. Entire 15 lakh should be recognized in the same interim period. So instead of 3 lakh, they should have recognized 15 lakh. So right now their profit is overstated because they have recognized 3 lakh rupees of expense instead of 15 lakh. So will you add 12 lakh or reduce 12 lakh? Take on your calculator minus 12 lakh. That's minus 12 lakh also you charge in this quarter only. 50% of the loss of rupees 2 lakh incurred on disposal of a business segment has been allocated to this quarter. Now is it right? One question we solved just now, 18 number. Entire loss will be allocated to this quarter only. Is it right? But they have only allocated 50%. 50% of 2 lakh, 1 lakh. Add or less? Less. I should have recognized a loss of 2 lakh. And I have recognized a loss of only 1 lakh. So 1 lakh rupees got less charged, less 1 lakh. Cumulative loss of rupees 3 lakh resulting from change in the method of valuation of inventory was recognized in the second quarter, which included rupees 2 lakh related to earlier quarter. Add back, change in method of inventory valuation, retrospective effect. So this 2 lakh will be recognized in previous quarter. So this year only or this quarter only 1 lakh should be recognized. This additional loss of 2 lakh which you have recognized, reverse it. Add or less? Add 2 lakh on your calculator. Gain of 15 lakh from sale of investment sold in first quarter was apportioned equally over the full year. 15 divided by 4. That 3.75 you have apportioned in all the 4 quarters. Which means this quarter also got 3.75 lakh rupees income, which should have been recognized in first quarter. Add or less? Less. Take on your calculator 3,75,000. Now you press equal to. Right there. Adjusted PBT for the second quarter. Is it 6.3 lakh? It's written there. Actually negative or positive? Is it negative? Huh? Oh. Because you have so much of losses. The company should also restate the result of the previous quarter based on the above adjustment. This answer is over. This chapter is over.